Good morning from the Asia Pacific, just half an hour away from the opening bell in Hong Kong, Shenzhen, and Shanghai. You're watching the China Show. I'm David Ingles. Let's get to your top stories. This Thursday morning, stocks across the region are under pressure as Nvidia's revenue guidance fails to meet the loftiest of forecasts here. Bitcoin, meanwhile, now within striking distance of $100,000. Now, Baidu, and speaking of earnings, set to report results later today. Third quarter numbers are set to come out Thursday, with numbers expected to reflect the struggle to gain traction for its AI offerings. And the other big story, of course, in India, New York prosecutors indict Indian billionaire Goldman Adani on bribery charges, accusing him of hiding illegal payments from U.S. investors. Adani bonds are dropping substantially as we speak on these developments. We're almost softer just about across the board, as you can see on your screens. Equity markets are in offer. The dollar, which had a relatively strong day on Wednesday going into this morning, hence why euro is trading at 105.50, dollar yen is 155. We are seeing that pair back also, the stronger dollar. We are still feeling, though, the after effects of that strong dollar going into today. There's the dollar story, there's what's taking place in Russia and Ukraine, plus there's the Nvidia story, which there's a lot to unpack there. There really is something there for everybody. As far as the Nvidia story is concerned, there's that miss in guidance, although when you look at the guidance on Blackwell, for example, they think demand will outpace supply for the next coming quarters. And keep in mind, right, this is the world's biggest company in terms of value, and it's grown by 100% thereabouts in terms of revenue from last year. So all things in context. Speaking of Nvidia and the AI story, Taiwan export orders actually hit the highest in 2 years. That market is coming online, and of course, within that market, there we go. TSMC's in focus given the Nvidia story. Wistron, of course, was also a supplier of Nvidia, down about 1% in the opening bell. SK Hynix, two things out, right? There's the Nvidia angle, but there's also some updates from the company as it pertains to their HDMI chips. More on that later on and what that's doing. Nvidia after hours, as you can see, bottom of your screen, 2.5% to the downside. Okay, the approach to the Chinese markets open here, well, a couple of things. We are still in the window for the one-year MLF. We're looking at what this fix might look like today out of the PBOC, and certainly given where the exchange rate is, we could, and the operative word is we could possibly see the weakest fixing, or the highest one on dollar China, going back to 2022. A little bit more. In fact, we might get the weakest one since 2008. That one is due out in about 12 minutes from now. We're in a 3-day win streak on Hang Seng Index. And just speaking of data, I think it's inflation numbers coming through today out of Hong Kong, and also visitor arrivals out of Macau. Keep your eye on that. And of course, we'll get to all the earnings reaction and a preview of Baidu, which comes out later today, as we mentioned at the very top of the show. Okay, let's get to our top story. Nvidia out with their earnings a couple of hours back. Let's bring in our Bloomberg Tech Senior Executive Editor, Tom Giles in San Francisco for us. Tom, thank you for joining us right now. I know you guys are extremely busy with this earnings story. I believe the earnings call just wrapped up as well. There was something in his earnings report for everybody, Tom. Take us through the key takeaways there.
The big takeaways here are this is a company that is still operating at a very high level. They're executing. There's great demand for their most advanced chips that are helping generate, basically fueling this AI generation, this generative AI revolution, Still great demand for it. Demand is outstripping supply. That's the one area of constraint for them. And that did cause them to issue a forecast that was slightly below the loftiest expectations, as you noted earlier today. But it's a company that's still delivering. It's still very bullish on its own prospects, and it's still bullish on demand. And not a lot of signs that competition is making any significant inroads in their business. This is a company that is still growing like a startup, doubling revenue on a quarterly basis. That's something that you just don't see that often at a company that's been around as long as Nvidia has.
Yeah, absolutely. And I think, Tom, we can get a glimpse of what future or current demand looks like by looking at what their customers are saying. And I'm wondering whether we should be concerned, while this company is, of course, growing like a startup, it is dependent on just a handful of very big customers.
Mm-hmm. Yeah, there's a few people who've talked about a concentration of their customers. They're getting most of their revenue from a small number of customers. The fact is, though, each of those customers has very deep pockets, and they have all committed in their most recent earnings reports to continuing to make investments in generative AI. And when you hear a company like Meta talk about that, you know that that's going to translate to deeper and deeper demand for chips that Nvidia makes. So yeah, there is a little bit of that. There is a concentration, but gosh, if my customers have billions and billions and billions of dollars in cash, and they have told their own investors that you're going to have to be patient because we're going to continue to invest, that is a big green light for Nvidia, because it means that there's going to be ongoing demand for their chips.
Yeah, I mean, it's a good problem to have, isn't it? And really, I guess one prime example of that. Talk to us about Blackwell, because the problems there are they just can't keep up with demand.
Right.
Talk to us about supply chain concerns there, if any.
So, well, what you need to know about that is that the CFO talked about the fact that in order to meet that demand, they will be investing resources. That is going to crimp margins a little bit going forward. So you're going to see a dip early 2025, and then you're going to see it coming back to those mid-70 levels. The thing to remember, though, this is a company that you're talking about 70%, mid-70s% margins. That is so far above its peers like AMD, like Intel. These are just massive margins. So if you need to invest some more resources, engineering, talent into getting those Blackwell chips out the door, that's a sacrifice that Nvidia is willing to make, if it means keeping the customer satisfied and keeping Blackwell chips, the production where it needs to be.
Tom, thank you so much for taking the time. Tom Giles, our senior tech executive editor in San Francisco for us. It's been a busy day, of course, for Tom and his team there. Coming up this time in the next hour of the China Show, Beth Kindig out of the IO Fund joins us. She's lead analyst there. She's going to help us unpack, of course, this Nvidia story. So stay tuned for that interview at those times on your screens. Okay, let's talk about the implication of this, the macro Fed story, and there's also the China story on the equity market outlook going into 2025. Joining us now is Tim Moe, Chief Asia Pacific Regional Equity Strategist at Goldman Sachs. Tim, as always, a pleasure to have you on the show. Good morning, sir. Why don't we start up with this Nvidia and AI story? I mean, for obvious reasons, Taiwan, less so Korea come to mind. How does this change your outlook for those two markets, Tim?
I mean, honestly, David, it doesn't change it much. I mean, I think Tom put his finger on the pulse, which is that the fundamentals are actually very good. Market had lofty expectations. There's a bit of selling on the news. I just did a quick check. Nvidia was up 10% this month, 20% in the fourth quarter, and nearly 200% for the year. So obviously, the stock's had a very, very good run, and a bit of pullback is something which is entirely within the normal parameters of how stocks trade. So I really wouldn't read too much into the minute-by-minute price reaction here. I think the thing to keep an eye on really is the fundamentals, which still appear to be very strong. In fact, if you look at the export numbers for Taiwan, which came out yesterday, they were up above expectations, and that was on AI-related tech exports. So I think the underlying fundamental evidence is still quite good, and that still suggests that the key metric or the key theme going forward in next year is an AI focus within the tech space. And that's indeed one of the 5 themes that we identify for next year is a more nuanced tech cycle. The idea being that lagging edge aspects of tech are likely to come under some pricing pressure, both DRAM and NAND, and also some greater Chinese competition coming in. But the AI part of it is where the growth is. We think there's going to be 37% increase in server demand for AI servers next year. And then also that is where we think that as I said, the growth will be. So we like the AI theme. We've got a number of different ways of expressing it, including final point here, the pinch point for AI, which of course is constrained energy supply, and that's something which we like through a variety of power-related stocks in Asia.
Right. So Tim, this now takes us into sort of the idiosyncratic stories in the Asia Pacific, and you can take us through some of your bits of the report here. But I guess before we get into the nitty-gritty, how does Asia as a whole stack up relative to your peers in the U.S. and U.S. exceptionalism comes to mind currently. I'm not sure if that continues to be a story or something to worry about next year if you're looking at Asia exposure.
Well, for sure, yes. U.S. exceptionalism is definitely in play. And the key theme of our report and our view more broadly globally is that following the U.S. elections, there's been a clear shift in the macro environment, and we call it a more challenging mix for Asia, simply because, number one, growth is going to be somewhat softer than we were previously expecting, really focusing on the likely imposition of tariffs on China. Number two, we've got somewhat higher rates. The back end is going up 80 basis points, and we think that the U.S. 10-year will end next year at 4.25. Previously, we're looking at 4.0, and we think that the pace of central bank easing, central banks will still ease, but in a more attenuated manner. So kind of a softer slope of easing on the short end of the curve and higher long end rates. So higher rates obviously not great for equity markets. Then finally, we're clearly in a very strong dollar environment, and the historical correlation between the dollar and Asian equities is very, very strong and inverse, i.e. a stronger dollar tends to be more of a headwind for Asian equities. So you put growth rates and dollar together, and that's a less favorable macro mix. And that suggests that from a purely fundamental perspective, the U.S. can do better. Of course, you have to bring valuation into the picture here, and the U.S. is starting much higher valuations than Asia is. So if you look at our expected returns, we have somewhat higher returns in the U.S. My colleague David Costin and his team just published our U.S. outlook, and we're looking for about 10-11% upside for S&P to next year. Our numbers are looking for about 8% growth in the MSCI Asia Pacific X-Japan Index. So, both we think can do okay, but a slight tilt towards the U.S. for the reasons I've just mentioned.
Right. And now just to get into the details here, Tim, you mentioned China and tariffs. I'm looking at this. So I think it's 11-12%, if not mistaken, what you mentioned there for the S&P, 8% for Asia. You have 15% priced in upside for MSCI China, 13% on CSI 300. What assumptions are you making around tariffs and the potential impact given those projections, Tim?
Yeah, so I mean, it's the obvious question, David. And so for a variety of reasons, which I can't get into too much granularity here, our base case is a 20 percentage point increase in tariffs on China. And that's a function of our expectations of what sort of products will have tariffs placed on them. And the likelihood in the base case that there won't be as much on consumer goods, because then, of course, that would raise imported inflation in the United States, which is something that would not be desired. So our base case is 20% increase on China in terms of tariffs. We think everything else being equal, that would reduce China's GDP growth by about 70 basis points. However, we think there are two compensating factors. Number one, we think the renminbi would depreciate to about 750. And number two, we think there will be further policy support, which will be announced and forthcoming. And that indeed is the title of our China-related report, which is Policy Showtime, the idea that really we need delivery of policy in order to counterbalance the likely stresses on growth. So the bottom line is we think that China growth comes from our previous expectation of 4.7 to 4.5. So it's a step down from 4.9 this year to 4.5. So somewhat of a deceleration in growth. That being said, the market has recently corrected somewhat. Positions are very low. As of last night's close, we're just a tad under 10 times earnings. We think that if China takes or curtails the left-tail growth risk, that we can see 11 times earnings, so somewhat of a recovery valuation. And we've got about underlying growth this year of about 7%, maybe a little bit more for 2026. So if you put those together, you can get mid-teens upside, which really is how we're characterizing our view. It's kind of a tactical overweight. We think we can get a recovery in the market conditional upon delivery of policy support. But there's clearly wide tails around that, and that's something that investors will need to navigate as we go through next year.
Tim, stay put. Lots more to talk about. We'll get to India and some of the other markets across the region there with Tim Moe, Chief Asia Pacific Regional Equity Strategist at Goldman Sachs. Speaking of China, see a Baidu on deck today as far as earnings go, and the AI sector, certainly the Nvidia theme in focus here. We're now attuned to this company's results later today. A preview of what's ahead here for Baidu, also counting down to the open of trade, 15 minutes away from the opening bell in Shanghai, in Shenzhen, and here in Hong Kong. A rainy and rather cold Hong Kong this morning. Futures are pointing lower. This is the China Show.
Earning earnings season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell. Earnings from Caesars crossing the Bloomberg terminal.
Mondelez is reporting
Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate when your comps get tougher. How much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
Welcome back. You're watching the China Show. So we're getting the renminbi midpoint of the day just out right now. So it's, again, quite a substantial gap with the estimates here of, I think, north of 530 pips. 719.34 is your midpoint of today's onshore playground on the exchange rate. Away from FX markets, let's bring back Tim Moe. He's still with us out of Singapore. He's with Goldman Sachs, of course, Chief Asia Pacific Equity Strategist. Tim, I want to ask you about Japan. Topics 2,700, give or take. Nikkei's about 38,000. Global investors have somewhat tuned out of Japan. How are you looking at this market going into next year?
The quick answer is you should tune back in. And Japan, I'd say, was one of our favorite markets. We're overweight. And I think that after a period of consolidation where the market's really kind of chopped around after had a great first quarter, okay, second quarter, big hit in August, came back, consolidated. We think that the time is ripe for another move up. Why? I think that all those macro challenges that I was mentioning previously, David, a lot of those are actually playing in Japan's favor, I think, particularly the yen. So we've seen the yen go from sort of 140 to 155. And that's going to be a boon for earnings next year if that weaker exchange rate is held. The quick rule of thumb for us is that every 10-point move in the US JPY exchange rate is worth about 3.5% in earnings. So we've toned up our earnings for next year by close to 5%. The market, as I said, has kind of been range bound and it has eased off some of that valuation that it got to at the peak in July. So we're just shy of 14 times earnings. We think we can get to a bit above 14 on our target, which I think is very reasonable. You put those two things together and you get low teens upside for topics next year to our 3,100 target. And lots of themes that we like within the market. The banks are a great play on reflation and higher interest rates, steeper yield curve. You've got bottom-up corporate governance. You've got a defense theme. You've got consumer inflation. So there's a lot to do in Japan, and we think it's a market that will do well next year.
Right. The other market where I think you guys just went overweight is the Philippines. And I noticed that call actually might have come right after. I think correct me if I'm wrong, right after the market fell into a correction. Was that call a function because it just fell too much? Or is there a fundamental change or a mix of both, Tim, on the Philippines?
It's a mix of both. We actually started the year underweight in the Philippines. And then, as you said, in the second quarter, we had the market basically overtraded the macro environment. We have a way of calibrating how the market ought to trade relative to macro drivers. And the Philippines, along with Indonesia, fell short of that in the second quarter by about 10%. And so we thought that was a good opportunity to close that conservative view. And so we moved it to market weight mid-year. We've moved it again to overweight. And really the reason is that when we look at this shift in the macro variables going into 2025, Philippines is a more domestically oriented market. It's somewhat protected from a lot of the tariff concerns that are obviously very much in focus for China. And one of the key decision points for us was that of all the markets in Asia, Philippines is actually the cheapest on a relative to its history, so-called Z-score, standard deviation terms. Philippines is 1.8 standard deviations cheap, is trading at about 10, 11 times earnings. We think earnings will grow 10, 11% next year. A lot of that domestically oriented, as I said. So even though it's a small, illiquid market, we think there are opportunities in it, and it's deserving of a higher rating. So that's really our logic.
Perfect, Tim. Yeah. In fact, later on we'll be speaking with the stock exchange president. I'll let him know what you just said there. The other market that seems to be missing from your overweights, Tim, which was overweight, I think, up until a couple of months back, was India. The emerging theme seems to be that earnings might come in slightly more, I think, softer than where expectations are. There's also this Adani story, not to mention that specifically, but are the risks skewed? Is the risk reward for India right now not so much in favor, you think?
That's exactly right. So we downgraded our market view about a month ago. We've been overweight for quite some time. It's had a great run. but really for two key reasons. Number one, the market just was a bit over its skis, so to speak, in terms of valuation. It got up to 24 times earnings. That's at the high level in absolute terms relative to its own trading range, relative to the rest of the region. So a lot of good news is baked into the valuations. And then number two, we saw increasing signs of what we're calling a mid-cycle slowdown, both in terms of the economy and also in terms of earnings. So if you look at the third quarter earnings, fiscal year, second quarter, calendar year, third quarter, we've had quite significant misses. And if you look at the breadth of estimate changes, that's actually the most negative it's been for 2 years. So analysts have been cutting numbers. For looking ahead for next year, we're at 13% earnings growth, consensus still 16. So we don't think we're really all the way through the downgrade cycle. Markets come off about 10% from its high. Valuations come in a bit, but it's still on the more expensive side. So we think we're just going to have more of a kind of a time and price correction right now. Ultimately, that'll be a great entry point. We're very, very bullish, as I think a lot of other people are, on the longer term prospects for India. But we just think it needs to kind of digest this mid-cycle economic slowdown a bit in order to provide a better entry point going forward.
Tim, have a great rest of your Thursday ahead. Timothy Moe, their Chief Asia Pacific Regional Equity Strategist at Goldman Sachs, joining us out of Singapore. Just under 7 minutes to the opening bell. Hang Seng Index is lower 0.3% in the opening. Pre-markets there, so lots to unpack as we approach the Thursday session of these greater Chinese markets. This is Bloomberg. Welcome back. A couple of things here. So earnings reaction out of NEO. Shares are cut to neutral at Macquarie, so we'll see what happens with that. Shares did past tense fall overnight. It managed to close, I think, a little bit higher at the end of the session. Kuaishou also out with earnings. More on that in a moment. Baidu and KE Holdings. And, well, speaking of earnings, and we'll get to the Kingsoft in a moment here, but that's really a stock that's continued to rally on the back of earnings, which came out, I think, 2 days ago. Even, right? So there we go. Hang Seng Index 0.3%. We are set to snap this 3-day run today. The fixing coming in slightly on the stronger side of things. I think three things are weighing on sentiment today. You have Nvidia, you have what's taking place in Russia and Ukraine, and you have a strong dollar story, hence the exchange rate we're trading at right now across most of the region. Okay, very quickly, have a look at where we are. Stocks to watch. Baidu's out with earnings. Kuaishou did beat. And Kingsoft Cloud is poised to open again 15% higher on top of the 27% rally that we got on Wednesday. So that's really in many ways somewhat in the clouds, as they say. Going into the opening bell today, a live shot of Hong Kong and Shanghai. Futures are pointing down as we approach the open. And there seems to be is it a tomato? Is it a carrot? What is that in Lujiazui in Shanghai? Anyway, it's looking at you and me. This is Bloomberg. Good morning. We're starting things off with some breaking news right now. You might have seen the Adani story, and the latest development here is the company's units have scrapped, or they've put this on ice right now, this dollar bond sale after, of course, the news that came out overnight with Gautam Adani, of course, being charged on Wednesday in New York with bribery. It's unsurprising that they've pulled this, given the fact that you are looking at existing bonds tied to the company down as much as 10 cents, I believe, at one point, or 10%. And we are expecting, of course, all things equal, for shares to open up much lower when Indian markets open up. We'll get more on the story in a moment. We'll set that aside for now, as they have with that bond sale. Okay, let's go into the open today, just right on time. There we go. The opening bell should be opening lower on the CSI 300, 0.1% against the backdrop, really, of bottom of your screens. A down day across equity markets in the region. In fact, we're down almost by a similar amount. All that being said, though, we're almost done with earnings season. We have a couple of big names to get through here in Hong Kong. Turnover, though, has been fairly consistent as far as the mainland goes. So we have topped $1 trillion in turnover, renminbi, for a 36th straight session, and there is no reason to believe that we won't get a 37th session today. We just spoke with Goldman Sachs just a couple of minutes back, and they are still quite bullish, of course, on this market. They look at, I think they're looking at a 15% increase in MSCI China going into next year, 13% on the CSI 300. So you do the math from the current level of about 4,000, gets you to their index target on that. The Hong Kong markets are just opening up as well. Let's have a look at that and how we're doing. We're down about 85 points, 0.4%. Every single of these big ones are down at the open. Baidu's coming up with earnings. More on that in a moment there. Stronger dollar story. That's what happens. And you have, of course, the Nvidia story. And interesting enough, right? So when you look at, the best performing stocks in the greater Chinese region, right? And you can take your pick. So SMIC is a competitor. You have another stock which is coming up on your next board at the very bottom. That stock has actually gone through the roof. Cambricon, which is a chip maker, I believe, that is based out of Beijing, if I'm not mistaken there. That's coming up on your screens very, very shortly. So these are really some of the plays that have benefited from this geopolitical rift between the two. It's pulling back a little bit right now in the opening bell. NIO is bucking the trend, the weakness we saw overnight. I might be speaking a little bit too early here. Kuaishou down 10%. After that, the earnings came out, and Baidu, of course, is coming out with earnings later today. Yeah, we'll get you more on this Kuaishou story because it seems to be a story that we'll probably need to get into a bit later on in the show. In the meantime, though, speaking of earnings, Baidu is set to report results later today. And Min Lo, our China correspondent, is here with us to talk us through what we can expect from the company.
Yeah, so the outlook is not looking good. The adjusted net income expected to fall by 15%, which is the most since 2021. And there are a few factors at play here. Number one, of course, we are watching the ad revenue because that is a high margin business. That's expected to fall by 4% in the third quarter. That's partly because of that weak consumer sentiment that is weighing on business activity, but it's also because of Baidu's own AI transformation efforts, because they have been experimenting with replacing in their search engine the first sponsored link with a Gen AI provided link, so that AI transformation effort is cannibalizing on its own ad revenue. And then that brings me to my second point, which is their AI tools. According to our Bloomberg Intelligence team, that is a little bit overhyped. It's expected to be loss-making in the next 3 years. And granted, Baidu is a market leader when it comes to the AI chatbot Ernie, for example, and that is providing a little bit of revenue, but it's still very poor returns given that people are not very willing to pay for these AI tools, and considering that they have a huge number of registered users that are not really paying for that. And you have geopolitical concerns as well. The chip restrictions, for example, Baidu saying that its chip stockpile is enough to last 1-2 years to keep training that Ernie bot. And then when you go to its core business, the search engine, that is also under pressure from rival competitors when it comes to other short video platforms that can essentially also function as a search engine. So the revenue when it comes to both the core business as well as the video streaming platform like iQIYI, the forecast there in the third quarter expected to be less than the same period last year.
Min, thank you so much. Min Lo there with a preview of Baidu, which is set to report later today. So, we're done with Nvidia. We're almost done with Baidu. A couple of more to get us through the earnings season. And what a way really to bookend the season by looking at the total number of dividends so far that have been given out. So if you're waiting for payouts, beers on you. $431 billion paid out in the third quarter. This is based on the Janus Henderson Global Dividend Index. That's a record level for the period. And they say, of course, U.S. payouts in particular increased 10%, led by the likes of Alphabet and Meta, which both started to just give money out to shareholders in the form of dividends back in this year so far. We're also looking at banks and media companies also making some of the largest distributions or contributions to dividend growth on a global basis. So really nice to have as we wrap up earnings season here. Let's have a look at the IPO market here in Hong Kong. And there's a group of very rich people that have thrown the support between the listing environment here in the city. They have been lending their support, of course, for the first time in years to this IPO market, raising hopes that the recent recovery in listings can keep ongoing. Manuel Baigori, our Asia-Pacific deals reporter, is here with us to talk us through what exactly is happening, who's giving the money and where are they giving it.
David, no, it's a fascinating story. I mean, we are seeing a bit of a comeback in IPOs in Hong Kong. It's still pretty mild. I mean, we shouldn't,
get too excited?
Exactly, ahead of ourselves. But, I mean, people are cautiously, starting to see, more issuers potentially thinking about coming to Hong Kong and sell shares in the city. So that's already positive. And now what's interesting that we saw this week is on the back of SF Express or the so-called FedEx of China, so to speak. We've seen some of the tycoons, some of the big names, the property developers coming and also participating in these IPOs that we hadn't seen in a few years. And we thought it was quite an interesting new twist in this environment.
Yeah, so what is happening? So they're coming in not so much listing, but they're coming in as cornerstone investors and really backing these listings, aren't they?
Exactly, which is very critical in Hong Kong IPOs because they provide some stability at least for 6 months, right?
Yeah.
Then they can trade the shares. But they're coming in with 20, 30, 40 million dollar checks and kind of supporting these IPOs. And that gives, as I said, stability and also it sends a sign of confidence, right, to the market that these people, very rich, powerful people, are coming back in some shape or form.
Yep, and here's some of the names coming out, some listings here. So this is going to keep you busy here, right? Cherry,
Yes.
Foshan Haitian,
Yes.
and some other names as well. So Manuel, we'll let you go. I know your team is busy there with many of these. One name is missing, though. I think we all know who that is. Anyway, we'll see. All right, you can get an insider's guide to the money and people shaking up the finance hub in our Hong Kong edition newsletter. It's out every Thursday. And guess what day of the week it is? Check that out, Bloomberg.com/newsletters. And still ahead here on the China Show. And speaking of IPOs, what is the pipeline looking like in the Philippines looking at next year? Well, there's no better person to ask than the boss himself of the stock exchange. Ramon Monzon joins us at those times on your screens in the next hour of the China Show. Welcome back. You're watching The China Show. Qualcomm CEO says that the company is pushing into new markets and is really going as planned here. That's endeavor, even after their outlook failed to impress investors. Cristiano Amon tells Bloomberg that he's still confident about reaching targets. That's as the company looks beyond phone processors for growth.
We have been on this trajectory since 2021 when we had our last investor day and we outlined the plans to grow the company to other markets. We realized that the technology we produce for mobile could be very disruptive and we could build actually a leading position, what we did in automotive, what we did in PCs. And we thought would be the right thing to tell investors as we look in the next 5 years, how we're going to diversify the company. When you look at the company right now, most of our revenue is mobile. Mobile is a great market, but it doesn't grow as much until we have an AI upgrade cycle. However, those other markets that we're going, it will drive higher multiples. So as those revenues from non-mobile become a bigger percentage of Qualcomm, we have an opportunity to actually see a multiple expansion. So we want to outline to investors our trajectory. And what's exciting is really where we are right now. We're very happy with the results of the company in the near term. We show on the last earnings call, we're growing in all markets, including handsets. And we put out in 5 years, we're going to have $22 billion of non-handset revenue. But bearing any cyclicality on the market, we expect to continue to grow annually into those targets.
Bearing any cyclicality, can you just talk through what are the downside risks to automotive demands, to people actually upgrading to new and refreshed Android phones, which are going to remain?
Yeah, what I mentioned about cyclicality, I think the semiconductor industry, we have seen on the past few years, we had a bunch of different cycles, different markets, inventory corrections, we have capacity constraints. We're not assuming that going forward, but some of that, could happen. But when you look of the normalization of the market we see right now, if that continues, we feel very good about the ability to grow annually. To your question is, cars is one that we're incredibly excited because people are now buying new cars because of the computational capabilities and those big screens and the digital capabilities of the car. And I think that's what actually creating demand for our technology.
And that was my colleague Caroline Hyde, of course, speaking with Christiana Amon on Qualcomm there and the outlook there for the company. And some other corporate stories that we're tracking this morning, just to get you up to speed here on other things. Let's start things off with Ford and these job cuts. So they are planning more job cuts in Europe. That's as an industry-wide transition to EVs loses traction. It's looking to slash another 4,000 roles, mainly in Germany and in the UK. Now, the reductions aim to amount to about 14% of the workforce in the region and will hit production by the end of 2027. Now, Comcast is planning to spin off cable TV channels, including MSNBC, CNBC, and USA, into a new publicly traded company. Now, digital assets such as Fandango and Rotten Tomatoes will be included in that new entity, but the NBC broadcast network will remain with the parent company, along with Bravo and Peacock. Now, their spin-off aims to reduce Comcast exposure to declining traditional TV businesses. Arqiga's founder, Bill Huang, has been sentenced to 18 years in prison for fraud and market manipulation tied to the 2021 collapse of his family office. Now, the 60-year-old's prison term slightly less than the 21 years that prosecutors were initially seeking. Now, Huang was found guilty back in July of leading a scheme to mislead bank counterparties into giving Arqiga billions of dollars in trading capacity, then inflating, of course, his portfolio value. Okay. Let's get you the latest on this massive Adani story taking place. Sources have told us that the renewable unit have actually now scrapped the $600 million bond offering after U.S. prosecutors charged the group's founder, Gautam Adani, and other executives of participating in this alleged bribe plot. Now, Adani's nephew, Sagar Adani, is also among those indicted. Now, earlier this year, we spoke to him about the U.S. investigation. Have a look.
And if I may ask, the U.S. DOJ investigation, which has widened of late to figure out whether group-related entities or people have paid some bribes in India. This is the news that Bloomberg had reported. Now, this is a business which comes under your purview. Do you know anything about this?
So we, as a company policy, don't typically respond on legal or quasi-legal matters. We made a public statement about this overall anyways, that if there is even an entity that looks at it, it's in due course of their regular business and their regular interactions. So there's nothing specifically in particular that we have to disclose to the market that's separate or in addition from that.
And let's bring in Avril with us in Singapore for more details in this. Avril, yeah, just get us up to speed in case our viewers are just joining us right now. What do we need to know?
Yeah, I mean, just hours ago, we heard how U.S. prosecutors are leveling these charges against one of the world's richest people, right, Gautam Adani, and the charges center around his participation, allegedly, in a scheme that would give Indian government officials promised $250 million, and this is in exchange for securing solar energy contracts. There are also two other defendants in this case, and they are Sagar Adani as well as Vinit Jain, and they are executives at Adani Green, the renewable energy arm. And what U.S. prosecutors allege is that they broke federal law, and they also lied about the plan to raise money from U.S. investors. So far, phone calls, emails to Adani Group's U.S. offices weren't immediately returned. Now, as you alluded to a short while ago, the timing of this indictment is really interesting because it came just hours after Adani Green sold bonds in a $600 million offering that was 3 times oversubscribed. And of course, we're now hearing that the Adani Group's renewable units scrapped that $600 million bond offering after these prosecutors leveled charges against Gautam Adani. So that's what we know so far.
Okay, and it's unsurprising, Avril, because the timing, to your point, was ill-fit, let's put it that way, given the news flow. What investor reaction have we been seeing so far all morning?
Well, we're going to be watching out for when Indian markets open. I think some reaction is expected in the stocks of the Adani group of companies. Right. But already among the investor community, we have people pointing out that Adani's companies have been pretty resilient in terms of weathering allegations, including on Hindenburg, as you'll recall. But this just latest incident actually, they think, speaks to perhaps the challenges in emerging market investments, particularly surrounding governance, surrounding transparency, regulatory scrutiny. We also have the likes of Bloomberg Intelligence saying that they think the US charges may risk Adani firms' funding access, might make it challenging for them to issue dollar bonds, raise new funds from some international banks, and that could lead its firms to cut CapEx. So that's among the reactions we've been seeing so far, David.
Avril, thank you for getting us up to speed there. Avril Hong in Singapore for us. We'll have more on this story, of course, and others once we see more developments coming through here. Going into the India Open, which is about 2 hours away. Plenty more ahead, suffice to say. This is Bloomberg. Good morning. Let's get to you all caught up with some geopolitical developments that we're tracking this morning. So Bloomberg has learned that the Biden White House plans to cancel more than $4.6 billion in debt owed by Ukraine. Now, a State Department letter shows that the White House wants to forgive half of a $9 billion loan delivered to Kyiv that was back in April. Now, the move is part of this broader effort by President Biden to rush more support to Kyiv before Donald Trump takes office, of course, in about 2 months from now. Now, Ukrainian forces have fired British cruise missiles at targets inside Russia for the first time, expanding this use of Western-provided long-range weapons. Now, sources say the UK approved the use of Stormy Shadow missiles after Russia deployed North Korean troops, which it saw as an escalation. Now, the strike comes a day after Ukraine fired a U.S. tactical missile system into Russia for the first time. Of course, that took place also just this week. Now, China's police chief is vowing to ensure security after a recent series of mass killings. State media say the Minister of Public Security, Wang Xiaohong, is calling for more patrols to ensure safety and social stability. Last week, a man drove his car into a crowd in Zhuhai, killing 35 and injuring dozens more, while an attacker stabbed 8 people to death in the Jiangsu province. Let's have a look at markets right now, and a couple of themes to tell you about. We'll start things off with earnings and Kuaishou and how quickly, no pun intended there, how stock has just unpeeled, given and despite the results, which actually came in not just in line, but slightly above, depending on the metrics you're looking at as well. So the stock currently is on track for about the worst day in about 6 weeks or so. We're now trading at about the lowest in about 3 weeks on shares of Kuaishou, trading at just over 47 Hong Kong dollars a pop. Online gaming stocks in focus, and speaking of, broadly speaking, this is also part of the general universe here, Tencent, NetEase, and some of the other game makers here. So this narrative of an improving, in fact, if not even more friendly environment as it pertains to online games in the gaming pipeline, you have 7 more titles, so 7 more imported, and 112 domestic games were approved in November. So that takes the pipeline, and certainly you can extrapolate from pipeline to projected revenue, in some cases quite strongly. I guess I'll let you guys do that right now. But in any case, of course, when you look at stock, not so much reaction there as well. Right, we're looking at also Bitcoin. So 94,000, 95,000, we topped that. What are we doing now? Just under 95,000 right now. We topped it a couple of minutes back, so in the last hour or so. So suffice to say, the immediate focus then turns to the next round number, which might be 6 figures, right? 100,000 on Bitcoin, very much in play. And in case you missed it, actually, we did see the White House, I believe the story earlier on was the White House was considering for the first time a role as far as cryptocurrency is concerned. There are more details, I guess, on that in a moment. But certainly the tailwinds are continuing to blow as far as Bitcoin is concerned. Okay, broadly speaking, Chinese markets are doing this. It's quiet on the rates front. We've been stuck in a range, which I guess is a good thing when you look at the backdrop, really, that we haven't quite retraced all the way back. Although, for the bears out there, here's one statistic for you guys. We are about 5% away on MSCI China from entering a bear market. So we're down about 15% from the peak. We're still up about the same, I believe, from the bottom. So we're about the midpoint from that. But if you nice round numbers, that's one to watch very, very closely. As far as earnings go, we're talking about Baidu's coming out with earnings today. We're looking at earnings reaction out of NIO. And as far as data is concerned, we're looking at inflation numbers coming out of Hong Kong today. That's set to come out. And also casino revenue is also set to come out later today. We are still in the window, by the way, for the MLF. So watch out for that very closely. And global macro movers for you. Softness in the equity market. Softness currently in the dollar after quite a firm reading on the dollar yesterday, which is, as you can see, still causing some headwinds for risk assets here in the region. Yields are generally pushing higher going into this, and commodity markets are fairly mixed following the big move up, of course, in things like gold and, to a lesser extent, oil over the last couple of sessions or so. Coming up in the next hour, more on the EM story, and we'll be joined by the PSE, Philippine Stock Exchange President and CEO, Ramon Monzon, who'll be joining us out of KL. This time, we'll ask him what he's doing there and the outlook for the IPO pipeline. And on the Nvidia story, Beth Kindig joins us in a couple of minutes. This is Bloomberg. Welcome back and welcome to the second hour of the China show. We're looking at a Hang Seng Index just coming off highs of the day, as you can see on your right. 0.2% to the downside. Some of the projections for next year are coming through, and so far we've had HSBC this week. I think they have a 21% pop projected for, I think it's Hong Kong, if I'm not mistaken, Hang Seng China to be more specific, going into next year. Goldman Sachs joined us in the last hour, and they think actually MSCI China goes up by, I think, 13% is what they're projecting going into next year. On your left is a cloudy, rainy, and relatively cold morning here in Hong Kong. That's a view, of course, of the peak for those of us who will never be able to enjoy the view from the top, as they sell. Welcome to the program. Market check going into today. There's the Nvidia story to tell you about, of course. There's what's taking place in Russia and Ukraine. There's a strong dollar story. And as you can see, the chip story is playing out here. I mean, you got to wonder whether or not markets are just looking and obsessed with finding holes in this Nvidia story. But certainly when you look at price action today, we are seeing these sort of scale down a little bit after Nvidia, I think, fell about 2.5% in your after-hours trade post-earnings there as well. Very quickly, the other big story, of course, is the Adani story, and I think we have a chart of that. Can we get that up, guys, if we have it? So the equity markets have yet to start and open up, of course, in India, although we are already feeling the fallout in the Adani story playing out in the bond markets, whereas you can see on the right side of your screens, some of the dollar bonds of the group are down as much as 10 cents, if not more. In some cases, there's also the story of a cash call in the bond markets being pulled. Futures are pointing lower, 0.4%. Yeah, I mean, and let's bring in our co-pilot this hour. Haidi joins us out of Sydney today. And yeah, Haidi, we were supposed to be talking about Nvidia, but this Adani story, it's creeping up in terms of its where investors are attuned to at the moment.
Yeah, and it's interesting, right, because we did see the cancellation when it comes to the renewables unit really scrambling to scrap their $600 million bond offering after the news broke of U.S. prosecutors launching this investigation and that charge coming through as well. So it's interesting, Dave, we're also looking at the implications for future fundraising, right? Bloomberg Intelligence pointing out that this could make it quite difficult for Adani units to be able to raise cash, although some of the strong cash flows when it comes to its ports business, for example, its energy business, it will kind of lend it some support, at least in the short to medium term. But we're still trying to get details of, those who are indicted, what the next steps are. And Gautam Adani's nephew, Sagar Adani, Dave, is also among those indicted. And earlier this year, we actually spoke with him about the US investigation.
And if I may ask, the US DOJ investigation, which has widened of late to figure out whether group-related entities or people have paid some bribes in India. This is the news that Bloomberg had reported. Now, this is a business which comes under your purview. Do you know anything about this?
So we, as a company policy, don't typically respond on legal or quasi-legal matters. We made a public statement about this overall anyways, that if there is even an entity that looks at it, it's in due course of their regular business and their regular interactions. So there's nothing specifically in particular that we have to disclose to the market that's separate or in addition from that.
Okay, so that's one major story we'll continue to track throughout the course of this morning, particularly as we approach the India Open. The other big piece of news, of course, in the slightest chance that you missed it, is the Nvidia story. So reported results about 4.5 hours back, Haidi. Revenue, okay, here's the thing, right? So this is a company that reported almost 100% jump in revenue year on year. And here's the market. We're looking at the guidance and like, oh, they missed the forecast. They missed the lofty forecast. $37.5 billion is the revenue guidance coming out of Nvidia, which actually came in and on a factual basis fine. Slightly lower than some of the forecasts here, which I think as high as $41 billion from the street here. Let's put this into context, and I guess no better person really to help us do that than Beth Kindig, who joins us right now. She's lead tech analyst at IO Fund. Beth, you've followed this company, of course, for a long time. I think you're also on the earnings call. I mean, should we just calibrate our lenses a little bit right now and stop, I guess, in some ways, fault finding here?
For sure. I think calibrating is a great word to use. Clearly, Nvidia is a very strong stock right now. In fact, what we're tracking and what was echoed on the call is that next year, 2025 calendar year, will exceed 2023 and 2024 combined. The way that Jensen Huang stated it is that at the end of this generation, there are about 100,000 hoppers. He's talking about 100,000 hopper GPUs. He's saying the next generation will be starting at 100,000 Blackwells. In fact, I believe he's talking about, the 100 billion revenue mark. He's saying that Blackwell will pick up where Hopper ended. That is an extremely fast ramp. Now, when it comes to nitpicking the stock, it is a hard one for analysts to get there to gauge. This stock has beat again this quarter by $2 billion. If you look at the analyst revisions, we are at double the revenue rate that analysts expected coming into this year. If you were to ask me, analysts have no idea what to expect from Nvidia moving forward this year and moving forward into next year.
Yeah, what do you make of that, Beth? I was going to ask you about this dynamic and where Nvidia clearly beats on actual when they report on that quarter. But recently, when they give guidance, it seems to miss. So I'm not sure who's wrong. Are analysts not listening to what the company says during these earnings calls?
Analysts are trying, that's a great question. Analysts are trying to wrap their head around the extremely bullish signals we see in the supply chain. And management is not offering any guidance on Blackwell for this quarter. They have said several billions. In this call, they said it will be bigger than several billions. Analysts, that could be 5 billion, 8 billion, 10 billion. We're not sure. And I like that aspect about Nvidia's management. As you stated, I've tracked this management team very closely. I like that they're tight-lipped right when this, big generation is ramping. It has allowed the stock to maybe take a breather. And in our opinion, it's a buy on dips before that Blackwell impact hits. I like the mystery around Nvidia right now. I find that allows me a better buying opportunity.
So you like them being a little bit more on the conservative side. I mean, it's sort of at the top of the list of great problems to have, right, of being too much demand. Do you see many sort of pitfalls or risks around the rollout of Blackwell? You know, could it get to a situation where that supply side becomes really problematic?
As you've seen, there have been rumors that the supply chain has components that are overheating, that at one point there was a rumor Taiwan Semi had machines sitting idle. These have been entirely debunked. As the management team pointed out today, Blackwell is shipping on time. Full steam was actually their phrase. And it's exceeding their expectations for Q4. So all of that has been debunked. And going back to a good problem to have, where analysts were getting very nitpicky was on the margins. Never underestimate Wall Street's ability to miss the bigger picture. They're really nitpicking this company on a 200 bips margin contraction. If you look at the bigger picture, this company has double the operating margin of any other Mag 7 outside of Microsoft. To nitpick Nvidia on those margins is truly missing the big picture, which again goes back to the fact that what we will see next year will exceed 2023 and 2024 combined. And the CFO alleviated those fears around margins by saying we should exit the year back in the mid-70s on gross margins. So all is well with Nvidia.
Do you see any more potential for sort of unexpected upside from policy regulatory loosening, right? We know that that's one of the, maybe not the top priority, but certainly one of the priorities that have been raised by the incoming Trump administration.
Where I see the Trump administration affecting Nvidia actually does not have as much to do with Nvidia. It has to do with all of Nvidia's peers, the broader semiconductor sector. I believe the market is already pricing this in. We're seeing weakness more broadly in the semiconductor sector. Many of these, even AI leaders, are meaningfully below their all-time highs. When you look at ETFs, SMH, or SOX, those ETFs are showing us they are 20% or 15% below all-time highs, while the S&P 500 is making new all-time highs. I believe the biggest impact Nvidia will face is actually peer pressure from the other semiconductor companies that can't overcome tariffs as easily as a company where their supply is already their supply is already sold out for next year. Nvidia's supply is sold out. They can easily overcome any of these headwinds, but their peers cannot. And I would watch that piece in terms of pressure on Nvidia's price.
Right. You did mention that, Beth. Just going into next year, China and tariffs might start to feature more prominently in this conversation. I want to pick up on one of the points you just made earlier on, where the management has largely been tight-lipped on giving us specific figures. Is there anything we can glean, though, from its big and a handful of customers in terms of their CapEx plans and what we can learn from that to extrapolate where this Nvidia story will be this time next year?
Absolutely. That is an area my firm specializes in. The fiscal year estimates from analysts are at 185. We are tracking a minimum of 210. So that's a roughly 30% upside. What that upside is based on are the NVL72 systems and the orders that we have seen come through for those systems. What that estimate does not take into account is pricing power. If we zoom out and look at other systems, the DGX systems with Blackwell, they're priced 40% higher than Hopper. So when you take all of these pieces together, we're looking, we believe, a minimum of $210 billion next year in NVIDIA's data center. That would be roughly 30% higher than analysts today. That doesn't include the pricing power. I won't know that until fiscal year guide come February or potentially until May.
Beth, one of the things that you mentioned here, and I'm going to put that in quotation marks, 1 weak link, and you talked already about guidance there, but just help us understand why that might be something to watch as a, again, potential red flag moving forward.
And that was the guidance that might be the red flag?
Yeah. Guidance around the margin guidance.
The analysts are concerned about margin pressure. I believe they have nothing else to focus on. I would call Nvidia a perfect 10. And again, it goes back to some of those systems I was describing. What is unique about some of these systems that are coming out next year is that it will be an in-house CPU combined with, of course, Nvidia's GPUs. And that will help margins by the time that we end fiscal year 2026. I think that margin issues are completely overblown. They're missing the big picture. And in fact, even on the systems level, there's evidence that the margins will end the upcoming year as strong as they have been this year.
Beth, really great to have you with us. Beth Kindig is a lead tech analyst at IO Fund. Still ahead on the China show, we'll be speaking exclusively with the Philippine Stock Exchange CEO, Ramon. Monzon will be joining us following the benchmark's best day in more than 18 months. That conversation is up ahead. This is Bloomberg.
Season is here.
Third quarter earnings season, as we've been talking about, really in high gear.
Bloomberg is first to break the numbers.
We have some big earnings after the bell. Earnings from Caesars crossing the Bloomberg terminal. Mondelez is reporting Reddit, AMD, Snap.
Let's keep the conversation going.
With the smartest insights.
The bar keeps getting higher. 20% growth rate. When your comps get tougher, how much can you beat and raise?
Continuing coverage on Bloomberg. Context changes everything.
Right. Baidu is set to report results later today, and certainly if you ask analysts, they're not as excited as in the previous years. In fact, you look at the consensus rating on the stock, which is effectively an amalgamation of buy, sell, and hold. You take a number, and that number is actually at the lowest going back to 2020. So what's the problem? Robert Lee is here with us, our senior analyst from Bloomberg Intelligence, to talk us through what to expect from Baidu. And the headline seems to suggest weakness because they're having trouble monetizing AI. And I'm wondering if that's accurate and fair.
Yes, it is. Take a step back, I would say Baidu's prime issue is the business is too thinly stretched. I mean, just going on market cap, to give you an idea of the size of the business, market cap in US dollar terms is about 30 billion, whereas Tencent's about 500. So this company is going head-to-head in AI with the big Goliaths of China tech, Tencent and Baidu, and I would say it's too thinly stretched and it lacks the resources and scale to compete effectively. But Baidu's problems are really twofold. Its core search engine business underpins the cash generation, which is funding their AI investments. That's under sustained attack from a number of new rivals as the market moves on. So we expect their advertising growth to come in negative. And then at the same time, they lack the scale to compete in AI, but there's a very heavy workload of R&D expenses that they need to keep investing in. So they're sort of being thinly stretched on two fronts, I would say.
And on the front of a lack of competitiveness or progress when it comes to AI, is this something that's specific to Baidu? Is this because of how fierce competition is? Is it sort of questions over, the payoff of these investments too?
I think it's become more and more apparent to people that the technical barriers to entry on the software side of AI are actually very low. And therefore, within the China market in particular, it's a hyper-competitive market with a plethora of companies competing and a low level of differentiation between their products. Tied in with the fact that the feedback from consumers is, they remain cautious. So they're not really spending. They don't see the full value add of these products at the moment. And therefore, it's very, very challenging for companies to monetize given that market backdrop. So as I said a moment ago, Baidu had some market leadership, but that is rapidly eroding as the big guys, the big tech platforms like Alibaba and Tencent make headway in the industry.
Well, speaking of, let's take a bigger step back because you guys have put out this report, this longer-term tussle between, of course, the U.S. and China as it pertains to AI. Do we have any idea right now, a better idea of longer-term winners and losers?
Yeah, I think really, again, it's scale will win out. Ultimately, Tencent and Alibaba in particular are well placed with maybe Huawei and ByteDance, in number 3, number 4 position. Because at the end of the day, these companies have got vast resources, both in terms of capital and R&D and engineers. So I think ultimately, it's a scale advantage that the likes of Baidu would find very difficult to compete. But in terms of technical progress, China is making good progress and is rapidly narrowing the gap on the software side. There are still the bottlenecks and questions on the semiconductor side, which we can talk about another time. But the key question for us, and which is drawn out in this report, is, again, what are the challenges to monetization? I've already touched on that. And I think in aggregate, our view is that the sector will remain in loss for at least the next few years, ahead of an inevitable sector consolidation.
Post that consolidation, can we, do we have sort of a view yet as to who's going to be the strongest survivor?
So, yeah, I think, again, the big tech platforms are best positioned to capitalize on that. Many of them, Tencent and Alibaba in particular, have an AI cloud business, so they're able to monetize their AI endeavors on a shorter-term timescale. But, again, we have a price war in the cloud computing sector at the moment. And, I think whilst they may drive incremental revenue, it's going to be very difficult to turn a profit within those businesses. So they'll continue making good progress on the technology front, but the route to profitability is going to be a long and arduous one.
Bloomberg Intelligence senior analyst Robert Laird there. Plenty more ahead. This is Bloomberg. The head of Japan's largest labor union is calling for Prime Minister Ishiba's government to accelerate efforts to boost wages. We spoke exclusively to the Rengo president, Tomoko Yoshino.
One of our reflections this year was to raise the wage level of small and medium-sized businesses, as the gap between large companies and small and medium-sized ones has widened. In order to achieve this, it is necessary to secure the resources to raise wages for small and medium-sized enterprises, so price shifting, including labor cost, will be very important.
We are seeing a lot of volatility in the yen. We are seeing slowing demand from the likes of China, maybe even the United States. How difficult do you expect it to be for these small and medium-sized businesses to be able to have good enough business to be able to hike wages?
As workers, we're in the manufacturing side of the business, and we believe that products should be priced appropriately, so it is very important to ensure that we can sell our products at a fair price. In order to do so, we would like to request that prices, including labor costs, be appropriately passed on to customers. Also, with regard to the exchange rate issue, as the yen depreciates, import prices will rise. So it is very important to seek appropriate prices.
The weak yen has a lot to do with monetary policy from the Bank of Japan. How do you expect the normalization of policy by the central bank to have an impact when it comes to wage negotiations and just the lives of workers?
We would like to decline to comment on that matter, but we're a labor union and we're seeking to enrich the lives of consumers and workers. In that sense, this year, we were able to raise wages to the highest level in 33 years. But since prices have risen even more than that, wages have not been able to keep up. We would like to make sure that this year's wage hikes will be put into a cyclical path for next year and beyond, and that we can realize wage increases in the same way.
Are policymakers, the Japanese government, doing enough to help you achieve those goals, to help the workers?
Last year, we began holding meetings to exchange opinions between government, labor, and management. And since the government, employers, and our labor union are all looking in the same direction toward raising wages, I think in this sense, we share the same challenge in Japan. As for wage increases, our treatment of employee is determined through individual labor management negotiations. However, since the overwhelming majority of companies do not have labor unions, it is difficult for them to negotiate with the company. So we're calling on the government to create an environment in which it is easy to raise wages.
What would you like to see from policymakers in terms of reining in inflation, something that is affecting the workers' livelihoods?
Yes, that's right. We're looking for stable increases in both wages and prices. And since prices are rising considerably, especially for items that consumers need, I think it will be very important to address the issue of high prices. However, it is not that high prices are bad. Our wages just need to rise more than that. Currently, wages in Japan are very low compared to the rest of the world. I think we're at a critical juncture in raising wages.
Right, that was Sherry's conversation there with the Rengo president. More on this Adani story and the breaking lines coming through in the last couple of minutes. So GQG's out with a statement. They're looking at the charges brought to Gautam Adani. They've underscored that more than 90% of their assets are unrelated, that any future policy portfolio actions will depend on what happens next. Plenty more ahead on this story.
It is 11:29 a.m. in Tokyo, where Japanese markets are going on a break in a minute. We have seen stocks falling broadly, but in particular driven by the declines in chip-related shares after Nvidia's revenue forecast missed the sort of loftiest of market expectations. We've seen weakness both for the topics as well as the Nikkei. Hitachi was one of the big contributors to the decline on the topics. That fell by just about over 1.5%. We have seen tech shares more broadly, including the likes of Sony, seeing some declines there and really the heaviest drags on the benchmark. We're also watching these levels in the yen as well, remaining still quite weak with that comeback of the greenback. It's sitting past that 155 to the dollar level this morning. Not a great deal of price action. We're waiting for about just after 2 p.m. We're expecting to hear from BOJ Governor Kazuo Ueda in a speech today. So really continuing to watch views on monetary policy, whether Japan will kind of alter any of its projections in that speech, given some of the uncertainty over Fed policy as well, Dave.
Yeah, the dollar story, I'm glad you brought it up. That's really one of the not too obvious headwinds we're looking at here in the region, on top of the Nvidia story that's dragging really on some of these big tech plays as well. Now, who knows how long that might last, given once the market eventually might be seeing through sort of the negatives coming through out of the Nvidia report, and then focusing on really the guidance, which, looking at next year, to our point of the guest earlier on, Beth Kindig, this is a very good stock to own, to her point. Right, S&P futures on that very note, we're down 0.3%. Asia's lower by about 0.1%. It's broadly a decent, almost split in between, in the middle here as far as sector movers are concerned. I'm counting 5 up. The rest are slightly to the downside as we speak. The Bloomberg Dollar Index on your screens is about 0.1% to the downside. And I guess in dollar yen, to Heidi's point earlier on, we'll wait if the BOJ needs to push back at this, or officials, given we are at about 155, 156. Suffice to say, though, Heidi, the weak yen will not stop us passing the bill to Sherry on if she makes her way here. And once we go out for those drinks, Sherry, the bill and the tab will be on you, despite, of course, the weak currency there in Japan. And I know she's somehow, somewhere, our Sherry-Ann is listening to us in Tokyo, sitting on a stack of yen as we speak. Anyway, we digress, as we say. Okay, Heidi, let's get more on the top story. So a couple of lines coming through in the last 15 minutes or so on this Adani story. One is on the political side, we have the opposition demanding a panel to look into what's taking place here. And the other, Heidi, is out of GQG. They're looking at how this might affect some of their potential portfolio actions here out of GQG.
Yeah, GQG Partners saying they're monitoring changes, the charges, I should say, brought on Gautam Adani. More than 90% of assets are unrelated to Adani Group. So, you know, we continue to kind of watch for the fallout of this, right? Given that we had that $600 million bond sale scrapped, it was kind of interesting timing because we had those units being priced of these dollar bonds just hours before the US charges were laid and all of this sort of started to play out. But we've seen a bond sold by the green business falling by a record 15 cents and just generally now, as you say, the government kind of becoming involved in this as well.
Yeah, as fate would have it, just after pricing those bonds, and to your point, right, Heidi, you mentioned too that our Bloomberg Intelligence folks do think this might make it harder, of course, to raise more money in the bond markets while this sort of cloud exists. Let's bring in our conglomerates media and telco reporter, PR Sanjay, joining us out of Mumbai. I mean, mate, this must dominate the news flow there like any other story this morning. Tell us what's happening there. How is this being digested so far in India?
So we are expecting a detailed statement from Gautam Adani in next 2 hours. That's one. And the opposition parties have asked for investigation into the alleged bribe scam. That's number 2. And of course, as you rightly pointed out, the first casualty of this one is like they have to scrap the bond issuance of Adani Green. They were upbeat since till yesterday that they've got great response from anchors. 6 top-notch anchors for the bond issuance. Now, with this news coming in, they have to scrap it. And this timing is also great because one is like they just launched the bond issue and the elections in one of the state, Maharashtra state, has just got over where Gautam Adani's name was being dragged into for mediating certain talks. And now, morning with a lot of interesting developments, and we are getting more information from the investors, and we are also waiting for a detailed statement from the conglomerate. How we are very curious how they are going to defend this. This seems to be very serious because they have invested a lot of efforts to clean up the Hindenburg crisis, and they came up, and then now there's a U.S. investigation coming in.
Yeah, the defense, the reaction from the company is really going to be key, right? What's going on when it comes to the bond market reaction? Is there a view that this, as Dave said, and as we've heard from Bloomberg Intelligence, that this is going to make it quite difficult for, obviously, future efforts to raise funds? Are the units kind of okay for now in terms of cash flow and recent strong equity raises that we've seen?
On a cash flow basis, the companies are very strong. It's too big to fall at this point of time. And if you recall, they had actually delayed this bond issuance for the right time because of the U.S. elections, and they were looking at 2 windows. But one was like November. This is right now. This one, and they was also looking at the Jan second week. And now, what will be interesting will be the new administration, Trump administration officials will be investigating to this. So they have to scrap this bond issuance for, I don't think they will be able to launch in the near future.
PR Sanchez, just very quickly here. So we obviously currently we're seeing bonds coming under severe pressure, number 1. Number 2, stocks are probably going to do the same thing going into the open today. Is the sense that this might cast on really an unwanted shadow over this equity market in India, which really, up until recently, has done very well, but we've entered a correction. Might this create more reason for people to pull their money out of this market short term?
This will have an implication. Certainly, it will have adverse implication on the equity markets. More than that, we are also expecting, since there's a lot of political dynamics are changing, and there's one of the key elections are happening in Maharashtra state. So with the parliament opposition leaders asking for an investigation, this can have multiple pressures. One is like pressure from equity market, and also there could be a lot of political crisis can emerge with Gautam Adani's name has been dragged into this political controversies. So it's going to be a tough time ahead for the port-to-power conglomerate, which is led by Gautam Adani.
Bloomberg's conglomerates, media and telecom reporter PR Sanjay there with us. And let's get some more when it comes to the broader market impact of this and bring in Bloomberg MLife strategist Mark Cranfield, who joins us in Singapore. And Mark, the Adani Group and associated companies is obviously dominant, significant, if not, overly representative. But is there a risk here that, perhaps in a way this is kind of reminding investors of some of perhaps the governance, the, transparency, some of the concerns that you would usually associate with riskier emerging markets?
Well, obviously, the cancellation of a bond issue is pretty embarrassing for anybody, particularly when it's a foreign currency bond as well. That's a big headache for everybody involved, and it doesn't help sentiment at all. So certainly, you would expect there's going to be some knee-jerk reactions to this, and investors are not going to be too happy about it. We saw when the Hindenburg report came out the last time, there was quite a big market reaction initially. But traders will typically look back at previous experiences to try and gauge where things are going from here. And actually the main lesson, the takeaway from what happened after the Hindenburg put out the negative reports that time was that people who bought the dip in Adani assets actually did pretty well. Things rebounded over a period of time, and actually the company got back to work and the stocks recovered. And all in all, it was the investors that actually had the patience to go with it that did the best out of it. So although, yes, it looks on the surface, it doesn't look good, there's bound to be lots of talk, and you can see already it's become a bit of political hot potato as well, which isn't going to help the matter. But people will take a more rational approach, and they'll look at it and they'll say, okay, is this company really in any jeopardy? If it's not, then any sell-off will probably be an opportunity where long-term investors will probably say it's starting to make sense on a relative value basis again, and they may well dive back in.
Mark, speaking of waiting for a dip to buy into, I just want to broaden the conversation and talk about this recent resurgence in the dollar. Massive move up in the greenback yesterday. We're seeing a pullback today in the dollar against its peers. Might this be an opportunity for dollar bulls to step back in, particularly when I look at dollar yen, for example?
Yeah, I think in the yen market especially, people are very focused on Governor Ueda, who is speaking later today. Apparently he's in Paris, and he'll have some comments to make there. And not surprisingly, in advance of that, the market's being a little bit defensive. The market clearly is pretty short of the yen already, and the numbers in the CFTC data show that the speculation has been increasing again. Nothing like it was in July, but it's still getting larger. So clearly, positioning is moving that way, and if anything, people will be a little bit concerned that Ueda might sound a little bit hawkish. But last week when he spoke, he managed to avoid really giving any suggestion that the December rate hike was on the table, and it looks as though it's going to be very difficult for him to do so again. So although dollar yen is a little bit lower, yes, you're probably right. People will probably see this once Ueda is out of the way, unless he really pulls a rabbit out of the hat. People will probably say, oh, thank goodness Ueda's out the way, let's go back to having bullish positions on the dollar, because clearly the fundamentals favor that way. Interest rates are so much higher. The Bank of Japan also has a complication of the political situation in Japan, where it just looks like they're going to pass a stimulus budget, but the trade-off for doing so is they needed the DPP support, and the DPP clearly don't want the Bank of Japan to raise interest rates in the near term. So a lot of factors are against the yen, and they don't look as though they're going to clear the way in the near term. It's increasingly looking as though the Bank of Japan will hike next year. They won't be able to do it this year. And so for the time being, shorting the yen looks like something that traders can do relatively clearly, at least for the rest of this year.
Mark, thank you. Mark Cranfield in Singapore for us, our MLife strategist there. Right, so we talked about India, we talked about Japan. India entered a correction recently, likely sees further pressure today. The other market in the region which entered a correction, technical correction, is the Philippines. And right after that, bullish call coming out of Goldman Sachs. We'll be speaking, and speaking of the Philippines, we'll be speaking with the Philippine Stock Exchange President and CEO. Ramon Monzon joins us after this break to talk us through the outlook, sentiments, and what they've got in store as far as pipeline products and everything in between. That conversation is coming up in a few minutes. This is Bloomberg.
Philippines is a more domestically oriented market. It's somewhat protected from a lot of the tariff concerns that are obviously very much in focus for China. And one of the key decision points for us was that of all the markets in Asia, Philippines is actually the cheapest on a relative to its history, so-called Z-score, standard deviation terms. Philippines is 1.8 standard deviations cheap, is trading at about 10, 11 times earnings. We think earnings will grow 10, 11% next year. A lot of that domestically oriented, as I said. So even though it's a small, illiquid market, we think there are opportunities in it, and it's deserving of a higher rating.
Tim Moe there out of Goldman Sachs, and the bank, of course, recently turned overweight and bullish on the Philippines. And to Tim's point, right, so I think the Z-score of negative 1.83 will round it up, and on a PE basis, 10-year average is actually trading at about that level, 2 sigma below the TME. So it is, in this sense, a cheap market. The market's been pulled back, of course, over 10% from the peak. To get a sense of how things are on the ground, what the opportunities are, and what the exchange is also looking to do, joining us exclusively is Ramon Monzon, President and CEO of the Philippine Stock Exchange. He's in Malaysia for the World Federation of Exchanges General Assembly. Mr. Monzon, thank you so much. Good morning, and we'll talk about what you guys are doing in Malaysia and KL in a moment. But, we started this off, I'm not sure if you heard, Goldman Sachs just turned bullish on markets in the Philippines. What's sentiment like on the ground, given the recent pullback?
Well, actually, the Philippine market was, on an upward trajectory for the third quarter. We reached a level of about 7.6, but unfortunately, it's gone down about 10%, or a little bit more than 10% after the U.S. elections. There are probably some uncertainties on the policies of the new U.S. president that could affect the Philippine economy and eventually the Philippine market.
Okay. Do you get a sense? Give us a fearless forecast, if you could, and we won't hold you to it, but do we get a sense that we can test the recent highs again, or do we save 7,600 for next year?
Okay. Well, we went down from 76 to 6,500, but we're back to about almost 6,900. We are not certain this time if our central bank is going to reduce, rates by another 25 bips or 50 bips, as they originally intended. But now, based on what I read this morning, our BSP governor is weighing if that should be, something that will happen. So if he reduces interest rates by another 25 bips, I think there's a good case for our market closing at about over the 7,000 level for the end of the year. The fearless forecast for next year is anywhere from 8,000 to 8,600 by different analysts and banks. So again, there's some policies of the new administration that are causing U.S. administration are causing uncertainty in the Philippine market, and hopefully that will be cleared out pretty soon.
Right, Mr. Monzon, let's move to maybe something that's slightly more under your control, which is really, I said somewhat under your control because obviously who pulls the trigger are the banks and the issuers. What is the IPO pipeline looking at going into next year?
Well, we had a very healthy IPO pipeline, for next year. But unfortunately, the last IPO we were supposed to have for the last quarter for December had deferred again for next year because of the drop in the, in the market situation in the Philippines. But for next year, we still are, very optimistic on getting some big ticket items doing an IPO. We know that one of the water concessionaires is preparing to do an IPO for the election. We are still hoping that GCash, the biggest e-wallet company in the Philippines, can address some of the issues that they've raised and, go to the market by next year. And we have some renewable energy companies that have indicated their, intention to do an IPO next year. So, fearless forecast, I think we should have a minimum of 6 IPO for 2025.
Okay, and do you think, I'm looking at a couple of stories here too, So do you think we'll get some of the state lenders list? Do you think we get that next year? So the likes of Land Bank, for example, and Development Bank of the Philippines, and also some casinos might be looking to list too next year. Might those four be a 2025 story?
In fact, our first scheduled IPO for 2025 was a gaming resort, a casino. But they had just informed me last week that they will be deferring their plans, and at the moment they have no definite, schedule for when their IPO will be. On the state-owned enterprises, the DBP and the Land Bank, our Secretary of Finance has indicated this, preference for these two banks to do an IPO for, corporate governance purposes. But, this is not going to, happen very fast because it will need some, amendments to their charter, which is a congressional amendment to their charter that will enable them to offer shares to the public. But we have...
Mr. Monzon, before we move on to the go ahead, go ahead.
We have one gaming company that is based in Central Luzon in Clark that has clearly indicated their plans to do an IPO for next year.
Oh, okay, perfect. Because I was actually going to ask you, we were talking about two gaming companies. Since you opened the door, so Han Casino Report, I think, is what you were alluding to on the ladder there. So it seems that they'll proceed. The other, though, can I just ask you more details on that? The company that you mentioned last week has indicated they might push it back. Is that the company behind Okada?
Correct. You got it, David.
Okay, well, yeah, 50-50, right?
Plan to do an IPO, the first IPO for 2025. And I just got informed last week by their legal advisor that, they've decided to defer their plans.
Mr. Monzon, I'm afraid all of those details took up the time we had today. Lots more to talk about next time. We'll pick it up there. Ramon Monzon, thank you so much for the time. President and CEO at the Philippine Stock Exchange there in Kuala Lumpur, of course, joining us there out of a conference there of World Exchanges. All right, if you're a Bloomberg subscriber, you can catch up on all the interviews you might have missed, TV Go, including that one for our clients. You can check that out, that function bottom of your screens on your Bloomberg terminal.
Headlines across national newspapers. And the China Securities Journal reports on the steps of state-owned companies are taking to boost their market value. It says several firms are actively exploring mergers and acquisitions, as well as share buybacks. The moves follow the release of CSRC guidelines encouraging companies to focus on their investment value and enhance investor returns. The journal was also flagging prospects for policy easing next year. Analysts quoted say that while rates are expected to remain stable for the rest of this year, there is room for the PBOC to cut rates and banks' reserve ratios come 2025. But the big story across Chinese state media at the moment is President Xi Jinping's meeting with Brazil's Lula da Silva. The official Xinhua news agency says the two leaders elevated their ties as they met in Brasilia, with Xi quoted as saying their relationship is something that transcends mountains and seas and is based on mutual respect, mutual benefit and amity. And indeed, Xi and Lula signed 37 agreements, including boosting a fund for strategic infrastructure projects in Brazil. These closer ties are worrying Washington, which has cautioned Brazil against deeper engagement with China, Dave.
Okay, let's look at some of these big movers in the region, and certainly given the news out of India, which we'll get to in a moment, this has really taken a back seat. A lot of the big earnings reaction we're seeing. So Kuaishou is down 11%, biggest drop, I believe, in about 6 weeks or so. Kingsoft is an earnings story from 2 days ago. The stock keeps giving, up a further 13% today. Baba Pictures is an earnings story, and of course Baidu is coming through later today. Very quickly, India futures ahead of the open in the next hour or so, and mark my word that this bill auction of India will not be your top story in India when its markets open up. Pressure is already coming through across Adani bonds. A cash call was pulled, and no doubt we'll get more details on this in the next hour here on Bloomberg TV. Stay tuned for that with Insights with Haslinda Amin.